Hello guys, it's Sugar Zeus Crypto, and today we're gonna talk about taxes, okay guys, about crypto tax. I'm gonna show you the way I do it, okay? I've been using TurboTax. I went to see 2 tax accountants before I decided just to do it on my own. So I'm gonna show you how to do it on your own. I'm not gonna go into TurboTax. I'm just wanna give you a brief tutorial how to do your mathematical analysis so you know how much you need to pay in taxes, okay guys? But first I'm gonna read this article by CNN Money. It was launched probably about March 26, which is a little bit not up to date, but I like what it reads into this article. It gives you guys an idea of what things need to be known in order to do your taxes, okay guys? Now, I'm not a financial advisor or a tax accountant, otherwise I will charge you guys, okay guys? I won't be here doing this for free, okay guys? I'm just only giving you guys a glimpse of my personal approach towards tax, okay guys? So let's get into the article, and then we're gonna get into data, and I'm gonna show you guys some numbers, okay guys? Okay, let's get in it. Reporting is on you. Usually on sales of stocks or bonds, your brokerage firm or bank will send you a 1099 tax form, says here. That's not the case for all crypto exchanges or most transactions. Coinbase will only issue the statement if you realize $20,000 in gains and had at least 200 transactions. It is a hard bar designed for major players, not your casual investors who wander in Bitcoin recently. What? Okay, that means it's up to you. That's what he's trying to say right there. I just don't like that word. Okay, crypto as property. Crypto as property. Since the IRS determines cryptocurrency to be properties like stocks or real estate, you need to pay taxes if you realize a capital gain, and you can lower your tax bill if you have taken a loss. You'll gather the information. You'll gather the following information. Now, this information is part of my 5 procedures. There's one more above all this right here that's talking about, and that's tax bracket. And I'll explain that to you right after I get done with this article. Okay, the first one you need to gather, according to the article, is when you bought the crypto, the date that you bought it, how much you pay for it, when you sold it, the date that you sold it, and what you sold it for, what you receive it for. Okay, I don't think the average person realizes that they need to track their basis, says Morin, which is the original value of an asset for tax purposes. Okay, usually, let me tell you guys something real quick. This is not only this tracking all this, when you bought, how much you pay for it, when you sold it, or how much you sold it for. It's not only good for taxes, guys, it's good for you too, because by the end of the day, you're gonna realize if you have gains or if you have losses in the crypto world. So it's very important, okay? For your own record, for my own record. I don't think the average person realizes that they need to track their basis, says Morin, which is original value of an asset for tax purposes. I already read that. Usually the basis is the purchase price, but it is adjusted for things like split, dividends, and return of capital distribution. You need the basis to determine the capital gain, or the difference between the asset cost basis and the current market value. This can become very confusing if you make various purchases at different times. Generally, you want to apply this first in, first out principle, says Morin. Alternatively, you could use websites aimed to help Bitcoin investors determine their tax liabilities. Bitcoin.tax and cointracking.info will help you figure out your transaction history, how much you owe, and how to fill out a Schedule D 1040 form for reporting capital gains or losses. So this website's here right here, Bitcoin.tax, cointracking.info. I'm going to link it on the description below, and I'm going to link this article where I got this from on the description below. And the reason why I want to do that is because I've used in the past Bitcoin tax, and they do work pretty fine. They use it like an API service that links to Coinbase, and Coinbase has that same API, so they can link safely without their having to access your funds. So it's a very secure way of linking. Basically, they export your transaction history and then they come up with they do the first in first out principle in you guys' transaction history, which is very convenient for you, so you don't have to do it manually. I kind of been liking to do it manually. I don't know why, but I just feel like it's like a home, if you pay somebody to clean your home, you're not gonna understand the four corners of it. But if you do it yourself, you kind of embrace it, you kind of touch it. And I don't know why I got into that, but you kind of feel that you're in touch with your gains or your losses, and you understand when you sold it, why you sold it for, etc., etc. Okay, number 3, don't hide trades. It may occur to you that if no one is reporting your capital gains to the IRS, no one really knows about your investments. It's never a good idea to try to skip out on your taxes, says Heron. You don't want to hide anything from the IRS. In the future, they may discover that you owe. There will be penalties and fines involved in that. Even though the notice on cryptocurrency is guidance, not regulation, it does comment on penalties. It says that taxpayer may be subject to penalties for not reporting, says Morning. The best way to avoid penalties is to do your best, the best you can with the reporting. Now, that's something that the 2 tax accountants went to see. They told me that. They told me, you know what? The IRS just wants to see people engaged, trying to report their gains and stuff like that. Because if they do that, then they'll most likely leave you alone, and they won't throw penalties or fees on you. They basically understand that we're doing our best right here, since there's no regulation just yet, established just yet. There's guidance, but not regulation. That will show that you didn't have a willful intent to avoid taxes. In some extreme situations, taxpayer could be subject to criminal prosecution for failing to properly report the income tax consequences of virtual transactions, the IRS said in a statement released Friday. And the penalties are steep. Anyone convicted of tax evasion, for example, is subject to prison term up to 5 years and a fine up to $250,000. Keep a log. This year you may be stuck with a suboptimal situation in which you're looking through receipts and statements and emails trying to get your information together. Going forward, it will be probably easier to keep detailed record of what you bought when you bought it, says Morning. In addition to keeping records of virtual currency transaction, it's a good idea to set aside money each time you make taxable trade to compensate for the tax associated with that transaction. No one's going to tell you to do it, but you'll be responsible for the consequences if you don't. Going with the idea that it will be up to you, and you need to keep those records to stay on the right side of Uncle Sam, says Heron. All right, so we read this article. We can understand that you have to keep track of those information, gather those information, and so on and so forth. Okay, I'm gonna explain to you tax brackets. Okay, we're gonna go on tax brackets. Now, everybody in the United States is in a tax bracket range. Not everybody earns the same amount of money every year. Everybody earns different. So depending, I'm gonna link on the description below, and you're gonna look into this taxable income bracket table here. And for example, I'm gonna put myself as an example. I earn like around $100,000 a year, so I fall into this category right here, in between $82,501 to $157,500, which is 24%. Okay, so we're gonna scroll down here, right here. Learn about capital gain tax rates. Okay, we're gonna get in here. All right. Okay, on this table right here, I like this table right here because it shows the ranges of income, and it shows the tax bracket, the short-term capital gain rate, and the long-term capital gain rate. So let's put myself as an example here. This is my range right here. So for sure, so if I sell within 12 months, within a year, it's a short-term capital. Is treated that way. So I would have to pay 24%, which is pretty high, compared to 15 if you sell after a year, after 12 months. you'd be 15%, which is very convenient for passive investors, which I've been pretty passive for a long time. I've been in Bitcoin since 2013, so I have had to pay capital gains at 15%, which is very convenient for me. All right, after this, we're gonna go into my Coinbase account. I think we're already on it, and on this, I'm inside my account right now. There's on tools. When you go on tools, when you go on tools, there's a tax center feature here, which is probably being open probably about for 5 months or something like that. It says this it gives you the transaction history. You could generate a report and you can export it all into like an Excel format. You got a gain and loss calculator, but the 2018 current one is not available. This is what I don't like. Like right now, if I have sold anything during the year 2018, I can't be stashing dollars and knowing how much money I have to save for next year's tax. That's why I feel like I'm 2 steps ahead, because I'm not waiting for 1099 forms being filed at me. I'm just doing my own homework before tax comes in early next year, before they even mail me the 1099 forms. So we're on reports. We're here on reports. We could create a new report, and this is the way I like to do it, because I have more control over. I'm ready for tax next year, and I don't have to wait for a 1099 form or anything like that, or to generate or wait for the tax center to be able for me to generate my gains and loss transaction taxes, or cost basis for taxes. Pardon. You click on it, you select the wallet that you want to, and then you go to the year that you want to, 2008. That's what's the advantage, that you could literally be tracking your gains, what you invest and you sell, and you get in, you get out. Okay, create report. Takes about a minute right here, a second, 3, maybe 15 seconds. Yeah, and then press download. We're gonna download it. Okay, it's right here. So basically, you focus on the receive date. This is the dates that you bought it right here. Boom, 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 boom. Okay. And the way I like to do it is I like to scroll over here. And right here shows here's your cost basis. This is what's important, guys. This is what's important, because this is based on this, you're gonna deduct, you're gonna minus how much you sold it for. Okay, and this is the sale transaction, and these are the send date. In my case, these are my sale dates, because this is the dates that I sold. Okay, I know what I did with the money. It's just right here. I send it to another wallet, and then I sold some. I know where I send it, and I know what I bought with it, so I know I'm responsible for my own decision, my own transactions. You understand? Okay, and then we scroll over here. It shows your cent price per coin, which is pretty convenient, but it's not really much of a use. What is much of a use is not your cent quantity, but the cent total. Okay, because the cent total means that this is sent or sold, because right here it says sold, but it says a cent, but it could be sent or sold. So I saw these high prices right here, and on this, and so you need to minus these numbers with the cost basis. And right here shows me already that homework's been done already, and it shows me right here on the long term that these are my gains long term. And if I scroll down, it'll show me my short term, because I just wanted to buy and sell short term. I wanted to be, instead of, I was passive for a long time, and then I began to be a little bit active in a short term while. And it shows that I've lost money in the minus. This is a short term, but it's a loss. So the short term or long term on a minus doesn't matter. It's a loss. So you can only use $3,000 a year. And let's say, for example, if you have if you have lost more than 5 grand, you only allowed to use $3,000 a year, and then the other $2,000 remaining that you lost, you could claim it on the next year's against your gains next year. You understand? I hope you do. It took me a little while to understand it, but I hope you guys understand it too. For me, the first things that you need to know is what are tax brackets. It's a range of income, and you have to know what range of income you are and what tax bracket you fall into, what percentage. Okay, so as you can see, everyone has a different tax bracket. Everybody has different numbers. Okay, so you just gotta figure out what number you fall into, and then second, you always have you could pull that chart that I just showed you from Coinbase, and you could determine what is your cost basis. Well, it does it for you. I should really show you in the very far right your loss and your short and your long-term gain. So you could do your own math work. It's very easy. It's very simple. The date that you purchase, the date of sale, and the sale price. Okay. I'm gonna scroll this down, and I'm gonna show you guys a little chart of basically what I do. So let's say this Bitcoin, I bought some. The two accountants that I met, they were both different. One of them liked to itemize line by line, just like the way it was at that data that I showed you, and the other one liked to sum it up from date to what day I bought it for, and came up with a big number, and then the sold dates that I sold it for until what day I stopped selling it. They focus on the long term first. They focus long term, short term, and then loss after. And the reason why they do this is because they want to use the loss against the short and long term gains. So I sold it for more than what I bought it for, as you can see the numbers right here. So if you minus 64 minus the 64,000 minus the 6,000 here, it is equivalent to $57,562.82. Okay, so you minus, let me do it right in front of you guys, that way you guys understand. So you grab the 57,562.84. It's very simple, guys. If I could do it, you guys could do it. Minus 15%. So this is how much I owe the IRS for next year so far. You know what I'm saying? So I could be stacking up the money, so when tax comes in, I know how much I have to pull out so I can pay Uncle Sam for my gains. You get it, guys? I hope you guys understand this video. Give a like, subscribe, and I'm gonna try to be better at this. Try to come up with better explanations. Be better at my accent, be better, at reading and everything like that, so you guys would understand everything that I'm saying to you guys. I hope you guys like this video. Give a like, comment, or subscribe, or whatever you guys like, and we'll see you then. Thank you very much.